nightmare, yeah.
So this is a joint hearing with the Revenue and Appropriations Committee to go over the 2021 Nebraska Tax Expenditure Report. This is a public hearing, but testimony is limited to the presentation of the report by the Department of Revenue. There is no public testimony. I ask everyone to please turn off their cell phones. I ask the senators to introduce themselves, but note that some have prior commitments and cannot attend. So let's start over. Senator Dorn, let's start with you.
Senator Martin Dorn, District 30, which is all of Yates County, part of Lancaster.
Senator Martin Colderman, District 24, Stewart, York, Polk, and sliver of
Senator Joni Albright, District 17, Wayne, Thurston, and Dakota counties, and now a portion of Dixon.
Kurt Friesen, District 34, Hamilton, Merritt, support of Hall County.
Tom Breezy, District 41.
Bert Lindstrom, District 18.
Anna Wishart, District 27.
Luann Lenahan, District 39.
Mike McDonald, Legislative District 5, South.
Rob Clemens, District 2, Cass County and Lancaster County.
Steve Erdman, District 47.
This joint hearing is required to be held no later than December 1 of each year pursuant to section 77-382. The statutes specify the items to be included in the report. With that, I welcome, we have some staff we should introduce too, don't we? Brittany with Appropriations Committee Clerk, and then the Revenue Committee staff, we have Kay Berquist, Mary J. Eckerson, and Grant Latimer. So with that, good morning.
Good morning.
Commissioner.
Chairwoman Linehan, members of the, is there anyone on the phone?
I'm sorry,
Is there anyone on the phone?
I don't think so.
Okay. Chairwoman Linehan, members of the Appropriations and Revenue Committees, for the record, my name is Tony Fulton, Tonyfulton, and I serve as Nebraska's Tax Commissioner. We are presenting the Interim Tax Expenditure Report, and you would have received this on October 15th. The department, pursuant to the Tax Expenditure Reporting Act, has published the 2021 Interim Tax Expenditure Report. Full reports have been published biennially since 1979, and that switched to even-numbered years in 1992. The interim report is a supplemental report on certain statutorily selected sales tax exemptions published biennially in odd-numbered years. The interim report covers the estimated fiscal cost of recent sales tax exemptions, service exemptions, and telecommunications exemptions. This report is to provide a mechanism which will enable the legislature to better determine those sectors of the economy which are receiving indirect subsidies as a result of tax expenditures. Current Nebraska Revised Statute 77-380 states, the legislature recognizes that the present budgeting system fails to accurately and totally reflect the revenue lost due to such tax expenditures, and that as a result, undetermined amounts of potential revenue are escaping public or legislative scrutiny. The loss of such potential revenue causes a narrow tax base, which in turn forces higher tax rates on the remaining tax base, end quote. A tax expenditure is defined as a revenue reduction that occurs in the tax base of the state or a political subdivision because of an exemption, deduction, exclusion, tax deferral, credit, or preferential rate introduced into the tax structure. Dr. Huafu Tran, Revenue Economist Manager for the department, will present the report today. But before I turn it over to Dr. Tran, I thought I'd give an opportunity for anyone to ask any questions. And I will stick around, so if there are questions afterward, I can answer them then too.
Thank you. Are there questions from the committee? Seeing none, thank you very much.
Well, good morning.
Good morning, Dustin.
And my name is Huafu Tran, Hoapsu, Tran, Tran. And I will be presenting the report today. Tony say a lot of about what I'm about to talk about anyway, so I might just repeat myself a little bit here with what Tony already said. So the outline for today is we will just go through the introduction of the tax expenditure report. We will define some of the technical term of what is the tax expenditure. Then we discuss a little bit about the sales tax basis, what is subject to the sales tax. Then I will talk a little bit about where the data coming from and how all this number are put together. Then we will get into the specific of what the items are in this interim tax report. This interim tax report is pretty small. It's not like the full report you see every other years in the even number of years. So I will try to. So the purpose of the report is to provide some kind of mechanism so that the legislature know what are the tax exemption in our tax code, so that they can make better decision on tax policy. Because when we have a tax base and then we put more exemption on the tax base, then we have to get a higher rate on all the tax that are not on all the goods that are not being exempt to get the same amount of revenue. So it's narrow on the base and at a higher rate. So full report of public pay in the even number of years. So the cycle basically go like this. So this year, 2021, we have the sales tax exemption implemented after 2012. The service purchases for non-businesses use, and then telecommunication. Next year, even number year, we will have the full report, and then 23, we do consumer goods, energy, and food. And then 24, we have a full cycle again, and then this cycle just repeats itself every 4 years. So tax expenditure, what is tax expenditure? Like I said earlier, if it's already if we have a tax paid and we take away something that's called tax expenditures, so services, for example, sometimes it's not considered tax expenditure because Nebraska tax pay would never include service to begin with. So a service that is not taxed now is not considered a tax expenditure, and so is input for production. You don't want to cascade the cost of production. So the sales tax, we tax basically all sales and lease, rental, installation, application, and repair of tangible personal property. Every person engaged in public utility, cable service operator, or satellite service operator, this is like cable TV, things like that, that's are subject to tax. Retail of intellectual property, like iTunes, things like that, you download from the internet, those are subject to sales tax. Sales admission, bundle transaction and repair, calling arrangement, like admission to sport event, things like that, that's also subject to sales tax. Warranty, guarantee, or service agreement, this is like extended warranty on your vehicle, things like that, are also subject to sales tax. And then renting of furnishing accommodation, this is hotel, things like that, under 30 days are subject to sales tax. And then selling or providing certain services. Again, services are added on after the sales tax was established in the 1970 something. So that is when we start adding more services in by new introduction by the legislature. That's why those get taxes. So the data for this report, so when we have something exempt, we don't actually have the real data in our tax database to quantify the exemption. So we have to look elsewhere, and a lot of this data are very specific. A lot of the sales tax exemption are specific, and the data might not go to that level of detail. So we mostly utilizing data source from the Census Bureau, a lot of federal agencies, the Census Bureau, the Bureau of Economic Analysis. If we have data in-house, we try to use them. If we can't use them, then we go to those data sources. And again, those data sources are at the national level, some are at the state level, and then we have to kind of allocate how those numbers play out to the best of our judgment on some of those expenditures. And then if there's a nonprofit organization involved, we try to look at the IRS form 990, which is also publicly available. So that's how we try to put this number together on this report. Some note on the estimation. Some case there's no data. We look at all the state and see how they do things, and we borrow or learn from them or copy from them, how they want to look at it. A lot of this estimates are static, they're not dynamic, meaning we only look at the level of expenditure and calculate the tax. We don't, like, if you raise the price of this, people might substitute. We don't do that in this report. And then some of the estimates are independent of each other, so they overlap, so you can't just go in and add every line up and then call this is, if we get rid of all this, this is how much money we're gonna get. That is not what this report is for. And it's smaller number, then it's fine, but when you have like a tax law that change, that's a significantly increase or reduce revenue, whichever way it's go, then human behavior will change. There's no doubt about that. And this report does not account for change in human behavior or consumption behavior. So here's the report. Kind of small for me on my screen, but we'll see. So we have a list of, so these are the recent sales tax exemption passed since 2012. First one is the list and construction of electrical power structure. I think this was just passed a few years ago. It's come about 11 million in the tax expenditure. Admission charge by organization dedicated to youth development and health living, that's 4 million. The biochip, 1.7 million, and data center about 6 million. This is the data center here it's assembled in state for use out of state. It's not like data center located in the state of Nebraska and do business and use in Nebraska. This is just for the out of state services. Meaning if they have a location here, they build the server and they ship that server to sell to another state. All the service that is provided outside the state. As you can see, there's a lot of data center right now, and this number does not reflect that.
Can you repeat? I didn't follow all that. Can you repeat it?
So let's say you have an IT company here, right? They buy server, they buy services and program on that, assemble that server, but that's later and gets shipped out of state. Those are tax exempt, right?
Is everybody else understanding? Okay. All right, thank you.
So because when you look at 5.7 million for data center or tax exemption, because their servers so expensive, so there's no way all that data center is only 6 million. So it's only for assembly and ship out of the state. Then you have a nonprofit Nebraska-based health clinic, about 2 million. Building of currency, million. Direct mail postage, about 3 million. Agricultural repair port, 17 million. And membership or admission to purchase by zoo or aquarium, about 1 million. Service exemption, motor vehicle cleaning repair service, about 18 million. Cleaning and repair of clothing, 2.5. Maintenance, patent, and repair of real property, 12 million. Personal care service, like haircut, massage, nail care, things like that, about 9.5 or 10 million. Other retail, real estate services like real estate agent, and then appraisal, about 45 million. Pet-related services, 15.6 million. Storage and moving, 7.7. Other personal services, weight loss, tattoo body modification of some kind, 5.2 million. Taxi, limousine, and other transportation services, 3.5 million. Legal services, 62 million. And this include purchases used by businesses. There's no data that you can break out the uses of legal by business or by consumer, by individual consumers. Accounting services, 10 million, other professional services. This include investment advice, travel agency, tour operation, physical dentist, chiropractors, all that stuff is in there, coming about 322 million. Then last thing is the telecommunication access charge, which is about 12 million. And I think that's the report. Question for me?
Yes, we have questions. Senator Friesen and then Senator Erdman. I'm sure there'll be more. Senator Friesen first.
Thank you, Chairwoman Linehan. On the personal services, it talks about weight loss, tattoo, and body modification.
Yes.
Body modifications, like elective surgery for what? Facelifts? Plastic surgery?
Some of those might fall under medical services.
Sex change operations? Body modification?
Like cosmetic surgery might fall under that, but I think it fall under medical of some kind.
Okay. I mean, I'm curious as to what differentiates between body modification and somebody who's been in an accident and needs reconstructive surgery. Is one and the same, or are they different? Maybe we can get some clarification on what that
Yeah,
means.
I can't answer that right now.
Okay.
I just don't know the example detail into what the definition exactly are, but some of the, I think if it body modification in the sense that you are referring to, that probably not in this number because those might fall under the medical services.
Okay,
So.
thank you.
Thank you, Senator Friesen. Senator Erdman.
Thank you, Senator Linehan. Thank you for coming today. So what's the total, all those together?
Well, I don't add them up, and I should not add them up because they are independent of each other, and then they might be overlapping. So some of the services might be overlapping. Like input for. So basically, you cannot add everything up and call this is the total tax expenditure.
So what can you do? How do I figure out what the total is then?
I don't know how to answer that question.
Because if I don't know what the total is, I don't know how to value this report you've given me if it's not complete, if I can't understand what the write-off
It
is.
is complete in the sense that they are independent of each other. Like the store, you can add like the storage and moving together with the pet-related services. But this is a short report. So in one of the example I tried is when you have like what Senator Friesen just talked about, some of that burden multiplication might be in two different locations. One is in this location and one might be in what we call medical exemption. So that two number might play in there. And also some of the medical exemption that we put in the report, if we get rid of that, we might not bring in that much money either, right? So this does not account for like if somebody use Medicare or Medicaid, you can't tax them regardless if we want to tax them or not. When they use that kind of money, you cannot tax them. But the report we put together, just saying hospital services include all spending at hospital, regardless of how the form of payment come into play. So short answer is I can't tell you if we can add them all. The only answer I can say is you cannot add them all up and say, if you get rid of all this exemption, this is how much it's going to be. But it will get you close.
Okay, one more question. So then, like the annual accounting service is 10 million. So the base on that would be 5.5% of the 10 million. 10 million is what we're giving up in taxes. Is that correct?
Yes.
Okay.
Thank you, Senator Erdman. Are there other questions? Senator McDonald.
Following up on Senator Erdman's question, If we're at 90% of these figures, would that be a safe ballpark with the overlap? Would you take 10%, 5%? What would your X percent be on the overlap?
Depend on the services. So this report is not a lot of business overlap, right? So because it's a small report, but if you take the big report, which I don't have right now, then you might get a bigger percent of overlap. Not only that, the biggest component in the loss report is the ingredient part. Like you buy stuff and then ingredient for your final product. Those are technically, we don't call them tax expenditure, but we have to do that because it's a requirement on the statute. That part, if you exempt that thing, like if you start the tax ingredient part, you're not going to get anywhere close to the number we put in there. It's just because when you have a tax that's going to raise, $1 billion, people will change their behavior. There's no way out. And so if that component by itself, if you talk about that, I mean, 50% might be the max you can get, not close to 80. So it's depend on the component to some extent. Like the services, if you might get close, but input and things like that, probably not.
Thank you.
Thank you, Senator McDonald. Senator Clemens.
Thank you, Madam Chair. And thank you, Mr. Tran. I have a sales tax question that's not in the report, but I'm curious as to if you're tracking the sales tax receipts we're getting from online sales and how they are, how the revenues are coming in when we added internet sales.
Well, I could provide a general answer on that. Clearly, since the passage of the internet sale and the third-party sales, if you will, the platform thingy, we've been seeing the general sales tax revenue increase, but at the same time, last year we're in a pandemic, so sales tax increase probably have something to do with that also. We cannot break out sales tax online versus non-online. We just can't. There's some of them we can look into the name and we know they're online, but there's some we just can't because when people file, when they register for a permit, they don't say they're online or on site or brick and mortar. And then when there's like Walmart, when they send in stuff, they don't classify if you order by your phone or you go to the store. So we can't really break that out.
So the reporting form does not ask for a breakdown between in-store or online sales. Be an estimate. I'd be curious if you have an estimate to give us. Thank you.
Thank you, Senator Clemens. Are there other questions? Senator Breezy.
Thank you. Senator Linehan, thank you for being here today. Relative to, for example, auto repairs, legal services, Office of Real Estate, realtors, have you ever tried to pull out the portion that was purchased by businesses there?
We tried, but there's no data that separate them out, especially on legal services. We just can't.
But with any of those categories you have tried?
Yes, we tried. That's why we put in there is include services, because if I think we were asked to do just for the non-business use, but we can't take that out. I mean, it's
okay. We're left to speculate on those.
Yes.
You're saying. Okay. Thank you.
Thank you, Senator Breezy. I have a follow-up question that if you have legal services in a business, aren't they tax deductible? Can't you?
That's a business expense. They might be deductible, but let's get charged a sales tax.
But couldn't you figure out how many businesses were deducting legal services or accounting services?
They're not a specific line on the tax return.
It's not on a specific line?
So exemption or deduction is all deduction for, I think, for any kind of deduction there is, rather than a different type of deduction. And
okay.
To the best of my knowledge, I don't think we break that down to the detail that we need on the tax return.
Follow up on Senator Clemens' question. So I understand Walmart, because you can phone in or you can have them deliver, but what about Amazon? Amazon doesn't have brick and mortar.
Right, but I can't give you that.
Pardon?
Yes, like I said, there's some name, when you look at it, you know how much of they are, but I can't give you that information. Because that's specific to a taxpayer.
Okay, but you know it.
I know it, yes, but
Okay.
I can't talk about it.
Okay. I thought, and maybe my memory is confused here, but on your membership for admission to or purchase by zoo or aquarium, I always thought that was $2 million.
It's probably.
We've talked a lot about that.
Yeah, I think the fiscal, the last time we did, I can't remember, but sometime I round this number on the presentation. I don't know what the,
Well, it might be because it was a pandemic and nobody went to the zoo.
yeah.
But generally speaking, I think that's
Yes.
$2 million.
That is correct.
Do you have that question? Senator McDonald?
No, I'm sorry, I do not.
Oh, okay. Any other questions? I'm trying to see what I made notes here. Okay, I think that's all. Okay, one more question. You said on, excuse me, on slide 7, you look at the IRS Form 990 information.
Yes.
What would be on a 990 that would have to do with this?
Some of the nonprofit organization that we exempt sales tax on certain things.
Some or all or?
Some of the item on here, this is whenever because in the tax expense report, there's this item for nonprofit organization. So whenever we see a nonprofit organization, we try to pull up the one that we know are nonprofit. And then we look at how much expenditure they're spending on, and then we take a percentage of that just to allocate to the thing that we're trying to exempt.
So do all organizations that are file a 990 don't pay sales tax?
No. On the 990, they list what they have as an expenditure. They have detailed their account. And one of those lines is how much they're spending on certain things. And then depending on the category that we asked to look at, we would try our best to take that, how much they're spending, and then narrow down to how much we think that is the spending on certain services or certain product, and then how that would be taxed for the exemption, yes. We exempted them from sales tax now, yes.
Okay, all right. Senator Urban?
Maybe one last question. Is it possible to get a report with the overlap taken out so it's more accurate?
I mean, if we don't, if we know the component, then probably, but this report asks for basically specific item by itself. So there might be some overlap. I'm just cautioned that when we add it all up, or even when we, I mean, if you're gonna write a bill example or take all this exemption away, the only thing I guarantee is you're probably not going to get all this money. I mean, that's a true statement. It's when you have a drastic change in the tax code, behavior will change. It's just like income tax. If you're going to tax at a high rate, people will change. Small increment, not so much, but when you have a drastic change, this will happen.
I drove 400 miles to listen to this report that may be accurate, it may not be. So next year when the report comes, I'm not coming back unless it's accurate.
It is accurate to the best of our ability at this point.
Thank you, Senator Urban. Are there other questions? Senator Friesen?
I'm curious here, there's also part of this report is, does the CIR somehow use sales tax information, sales and use tax, individual income tax.
Yes,
And setting wage disputes.
yes.
So it uses actual collections from a,
It's used, on the CIR, what we do is we take the base and then account for the law change going forward. And we keep that change for a couple of years, and then it's get built into the base, then we drop it off. So it's kind of a base adjustment for the consistent of the time series for the CIR purposes. We post that data on our website every quarter, I think.
okay. And so that, but again, the CIR, is it just affects public, like schools, public institutions? Or does it affect any private businesses?
No, I don't think it's affect private businesses. I think it's only used if you have I think that bill came out in. I guess my answer is we post the data, but then whoever use it.
Okay, I was just curious on why the CIR uses some of this data. It doesn't make sense to me.
It doesn't use the tax expenditure report, but it uses. So basically, when you have a tax change this year, right? Next year you might have a bigger or slower number depending on the change to the tax code. So when we compare quarter over quarter, that number might change, but not due to the economic activity. It might due to a change in the policy. So we try to watch that out so that the series is comparable apple to apple. That's the purpose of the CIR.
Okay, all right, thank you.
Thank you, Senator Friesen. Are there other questions? Seeing none? Thank you very
All right,
much.
thank you.
Commissioner, would you like to close? Or see if there's questions for you?
Thank you, Madam Chair. Just want to recap what we're going to owe some answers. So that's just, I don't know if that's the statute or what, but we'll just give you a response. Senator Friesen asked about body modifications and what constitutes a body modification for purposes of sales tax exemption. Basically is what you need. So we'll get you that answer. Don't know the answer. Might be an interesting topic. Senator Erdman, about the how this tax expenditure report works and why it can't be summed, why we can't add them. This is the way I'd say this. For forever, governments have been trying to centrally plan economies, and they fail miserably. They can't. So with that, I mean, that's the way I approach these issues. If we were to make a change in the tax code, a drastic change in the tax code, people's behavior changes such that all the other tax exemptions that we've calculated are also going to change. I'll give you an example that has always just been intriguing to me. We had a Senator Avery back in the day used to bring a bill exempting sales tax. I think it was, he brought a lot of renditions, but he wanted to exempt sales tax for school purchases 2 weeks before or something like that. So a sales tax holiday is what he called it. And other states have these. And so what happens during these sales tax holidays is everybody rushes to buy their school stuff. Even if they're going to save like, $2. But like in my hometown of Auburn, they'll drive all the way up to Shenandoah, Iowa to buy their school supplies, spend more on gasoline than they're actually saving on sales tax. Now, when we put that down mathematically, the amount of sales tax that's exempted is, however many sales occurred before the sales tax holiday came into play. But the actual amount that's being foregone, that we're out, is probably a lot more because all of these people, for whatever reason, behaviorally are rushing to wherever to buy their school supplies. So that's an example of how economics is not simply a mathematical function, it's also a behavioral function. And that's why it's impossible well, I won't say impossible. To simply sum these numbers, it's not going to be accurate if you actually, so if you got rid of all these sales tax exemptions, would all of that money come into the state? No, it wouldn't. And that is because of the behavioral changes that'll occur. I think what Dr. Tran's saying, and I think this would be accurate economically, if you have a wide scale change, then we might be able to get it within 80%, 90%. So a full sales tax reform, that would get you, that's kind of the tail of the dog, but that's how one would be able to calculate more accurately and make a better prediction. So the report is accurate. It's just that it doesn't behave the way, it doesn't behave mathematically. There's behavioral economics that play into this. I think that's the way to explain it. Senator Clements, that online sales tax question, probably the best way to get a number is to go back to LB, whatever it was for the Wayfair. After Wayfair passed, we had a bill here. I forget the number now. It was probably 4 years, 2017, I think. There would have been a fiscal note on that. And I think it was like 120.
63.
Yeah, I don't remember now, but 60 million?
44 million.
Something like that. Anyway, whatever that bill was, there's a fiscal note attached to it. That was the best guess that the Department of Revenue could put on what that online sales figure would be. What I would do in your shoes, I would take that number, I would adjust it for inflation going forward and growth, sales growth, which are numbers you can get from the Bureau of Labor, from the feds, whoever it is at the feds. That's what we would do in the department. The number is not broken out specifically for, I think Dr. Tran probably touched on it. Walmart's a great example. Was that bought online or did you buy it in the store? Did you buy it online and then go pick it up at the store? Well, how does that count as an online sale? And they don't break any of that out. And I guarantee it, as a business owner also, if we were to try to make them break that out, number one, they probably couldn't do it. Number two, it would be a serious burden on some of these companies. So we do our best with respect to what kind of online sales happen in Nebraska based on a national figure that is reported, and those are estimates too. So I think that's probably the most accurate number that we could provide would be somewhat based on that fiscal note back in the day, and you guys do have access to that. Okay, and then Senator Linehan had the question whether all nonprofits are sales tax exempt, and the answer is no. Yeah. Okay, so I think we owe one question response to Senator Friesen. If there are any others, I'd take a swing here.
Senator Lindstrom, on the sales tax, just motioned to me that it was LB 44. And I thought, maybe Senator Breezy can remember, but I thought it was 63 million. But it could be 122 if it was a biannual, and you might be thinking the biannual number or the 2-year number. But we can, as you say, we can.
Yeah,
locate
I
that.
just don't remember.
Yeah.
It's embarrassing. It was a big deal.
I think it was lower than that number.
Lower than that?
Fiscal note, yeah.
Okay. All right. Any other questions? Yes, Senator.
Thank you, Senator Linehan. So Commissioner Fulton, according to the notes here, it says the estimate that you're giving us are static and not dynamic. So static means what happened last year. So we don't have a sales tax holiday. We don't have those things. The question is, can you divide out the overlap so that when I see this report the next time, it's absolutely correct on what we give away?
Yeah, so the difference between static and dynamic, that's not accurate. Static isn't a reference to the prior years. So that's different. Yeah, this is so static, I guess the difference between static and dynamic. If you change, so if there are 5 variables, A, B, C, D, and E, and you change variable A, okay, and you affect it by $10, then adding statically the difference between A, B, C, D, and E, you would get $10. But the reality is B, C, D, and E also are going to change because you've adjusted A by $10. That's a dynamic situation where they're all interdependent. There's going to be a change behaviorally in the economic condition of the state. And so that's why we can't, it's not just we, no one on planet Earth can do this. My reference to centrally planning governments, they fail miserably because you can't scratch this itch and expect that this itch over here isn't going to come up. It's just human behavior. The economy changes when we make changes to the tax code. Now, does it change a ton? For instance, if you were to tax ingredient and component parts. So if I gotta buy 5 parts to assemble this thing that I'm gonna sell over here. We don't pay sales tax on the parts that are assembled. This is a generalization, but we don't have a sales tax on those assembled parts. If we changed our tax code to say, well, all of those assembled parts are now gonna be taxed, that's going to change the price of this final product that I sell, and therefore the number of final products that get purchased. There's a dynamic relationship between all of those things. So by changing this law, we're affecting something over here and probably a million other things that we did not account for. And so it's not possible. It's not just us. There's no one who can do this. And so that's all he's saying is that you can't simply add these up and say, well, we should change this one, and this one, and that's going to give us $18 million or whatever. The economy doesn't work that way.
Yes.
Let me ask it differently then. So this is what happened last year, is that correct? This report says what happened last year?
Right. For
Okay.
20, or is this 2021? Yeah, this is an estimate going forward for
Okay,
2021.
so we didn't change any laws last year, so we're saying, this is what happened last year. This is what happened. And you can't tell me, this is what happened last year. It's history. It's not something going forward. We haven't changed any laws. It's history. This is what happened last year. How much
Right.
money did we collect from this service or this? How much did we exempt? That's basically what we're asking you to tell us, and you can't tell us. It's history. It's not something going forward.
Yeah, that's what this is. This is the exemption. This is how much that will be foregone in the year 2021. And it's based on not just last year, but history.
So this is not last year. This is the current year we're in.
This is correct, of 2021. Yeah. And so if the only thing I just want to, where Dr. Tran is trying to get across and what I want to caution is that if one were to go down this list, and next year's list will be bigger, it'll be, that's the big one. If you went down the list and said, okay, we're going to put back the sales tax exemption on this product and this service and this product, and we add those up, and this is $3 million exempted and $3 million exempted and another $4 million exempted. If we change the law to say that we're no longer going to exempt those 3 items, you can't simply add them up and come up with $10 million to the Treasury. That's all he's saying. In terms of what this is saying, the tax expenditure report, it is our model for 2021 for this year. How much is being foregone this year?
Yes. Thank you, Senator Urban. Senator Clemens.
Thank you, Commissioner Fulton. Regarding 2021, is that fiscal year 21 ending last June, or is that calendar year 21?
I believe it is a calendar. Okay, so yeah, fiscal year 21.
Fiscal year, as it's, okay, it's not an estimate going till December, but it's what's, right, July of 20 to June of 21. Thank you. And I had a comment about the nonprofits. I do prepare a couple of 990 forms for nonprofits, and if they sell a product, like they sell a book, they pay sales tax on that. But if they have an event, charge $10 to come to a dinner, they don't charge sales tax on that, and those are separately recorded. So there are items that are taxed, but some that are not. That's how I've seen it.
Okay, thank you, Senator.
Thank you.
Senator Breezy.
Thank you. Thank you again for being here. You talked about our ability, or if we removed A, B, and C exemptions, we wouldn't recapture 100% of those dollars? What percent are we talking about on average would be your estimate?
I think it depends on the product.
Yes.
On the exemption.
On average, what do you think it might be?
I don't know. It depends on the product. Is that accurate?
Don't want to hazard a guess.
Yeah. I mean, I could give you a guess, but it'd be worthless as worthless things.
I'd take your guess if you had one.
It completely depends on the product. I honestly, I mean, so what if we got rid of the sales tax exemption on all ingredient and component parts? You see what the problem is. Okay, now the price of the things that are being assembled are going to go up. And people are not going to buy as much because the price has gone up. That's the strict economics of it. There are secondary and tertiary things that are going to happen also. You know, manufacturers probably going to leave. That's probably going to happen. If they don't have that sales tax, there's just, you know, again, I could hazard a guess, it'd be worthless.
Yeah. Depends on the elasticity of demand, I would say.
That's a part of it.
Anyway, okay, thank you.
Other questions from the committee? I'm gonna, just because I'm so confused, so I'm sorry to the committee. On slide 9 on the data centers. So they don't pay sales tax on equipment that's in Nebraska.
Say it again.
I just don't, I didn't understand, they don't pay sales tax on equipment that's in Nebraska.
Let the lawyer.
Madam Chair, this is Mike Walsh from the Department of
Hi,
Revenue.
Mike.
So on this slide, what we're saying is this is the items that are going to be used outside of Nebraska. So they can manufacture it here, but it's not, as Dr. Tran was saying, it's not what they're using here in Nebraska to service customers. It will be shipped outside of the state. That's why it's a smaller number, because obviously we have a large number of data centers now.
I'm sorry, say that last part again.
We have a large number of data services here.
Right,
And so this number would be exponentially larger.
because they don't pay sales tax on their equipment here either, do they?
Well, through incentives, they can get that back through incentive programs.
Okay.
But yeah,
So-
this is a specific exemption just for those that are going to be going outside of Nebraska. So they can put them together here.
I see, okay, that's helpful, all right. Other questions? Okay, seeing none, thank you very much.
Thank you.
The bill that passed was 280.